Hey everybody, we're going to talk about Lemonade, one of my favorite insurance businesses. Hasn't been one of my favorite stocks over the past few years because it hasn't performed too well from the 2021 peak, but that's neither here nor there. It's still a really interesting business, and management is doing a pretty good job with it. So we're going to dive into the latest numbers and whether or not this could be a really nice bargain at the current levels. Before we dive in, please take a look at the link you see on your screen, fool.com/Frankel. Get the top 10 stocks to buy right now from the Motley Fool. The best way to support this work I'm doing, again, that is fool.com/Frankel. All right, so we're going to dive into Lemonade's numbers, and I want to share my screen real quick. Bear with me on these visuals because this is Lemonade's letter to shareholders, and it can be a little difficult to see especially if you're watching this on a small screen. But I'll try to read through the most important parts. So the first chart you're seeing right over here is Lemonade's in-force premium. This is all of the premium on an annualized basis that Lemonade is collecting. Think of in-force premium. If you're an insurance company of 1,000 customers, each one's paying an average of $100, your in-force premium is $100,000. So Lemonade's in-force premium is $794 million. That is up 22% year over year. Lemonade now has almost 2.1 million customers. They grew their customer count by 13% year over year. And the average customer is spending 8% more than they were a year ago. That last number is not quite as high as I'd like it to see. Lemonade is starting to focus on higher cost forms of insurance, specifically auto insurance, which any driver can tell you costs more than $379 a year. But that's been a very slow rollout. Most of that 8% is really just premiums increasing on existing policies. And another thing most people who pay insurance can tell you is insurance is getting expensive lately, and we're starting to see that trickle into Lemonade's numbers. So I'm not too thrilled with the premiums per customer growth. The auto insurance rollout in general has been kind of slow, but these are still pretty strong growth numbers. The bigger story of the quarter is profitability, which is the second chart that you're seeing right here. Lemonade's gross loss ratio was 79% for the quarter. Now, what that means, for every dollar of premium that they brought in, they're paying 79 cents of that to cover losses, to cover claims that customers are making. Now, there are two things that insurance companies have to pay for. There are losses, which is that 79% right there, and there are business expenses, which could be 10%, 20%, 30% of the premiums you're taking in, depending on your business structure. Now, you want the sum of those two numbers to be under 100%. Lemonade doesn't really break it out, but they're not profitable, so you could guess that it's more than 100%. So the idea is that if the sum of those two numbers are under 100%, you're making an underwriting profit. Lemonade has said before that it believes it can make an underwriting profit if its gross loss ratio stays under 75%. That's been its target since the beginning. So this is definitely good progress in that direction. If you look at the first quarters, because you have to compare quarters, from the past 3 years, it went from 90%, which was terrible, to 87%, now to 79%. Now, I will say that this first quarter is seasonally a good one for insurance company profitability. Generally, if you have natural disasters, it happens in the summer months. That's when you have the big hurricanes that cost billions and billions of dollars in damage. And those are the peaks that you're seeing right here and right here in these charts. So take this number with a grain of salt. The fourth quarter and first quarter, because they're the colder months of the year, are typically not terrible when it comes to profitability. And that you saw the fourth quarter right here, the first quarter right here. So keep this in mind as we go through the year. The second and third quarter numbers are not likely to be quite this good. If they are, I will be very pleasantly surprised. But they're not likely to be quite that good. And it's to be expected. That's seasonality in the insurance business. If we go down here, there's a lot on this chart, but there are two things to really notice here. One is gross earned premium. So think of the in-force premium that we just mentioned as the total. That's their total insurance business. Gross earned premium was the premium added during the quarter. So that's going up very nicely right there. The little gray boxes down here, these are the company's losses. I mentioned Lemonade is not a profitable insurance company, has not been ever. But the key thing to notice here is that it is trending in the right direction. 2 years ago, Lemonade's net loss was $75 million, and it's steadily improved to a $47 million net loss. That's not actually lost money. That includes a lot of things like stock-based compensation that aren't the company's not actually giving out money for, but are expenses. Um, so its adjusted EBITDA is like a better metric to look at. That was negative 34 million, so still a loss. But Lemonade does have $927 million on its balance sheet. It has a lot of runway for that path to profitability to continue to materialize. We'll talk a little bit more about profitability in just a minute. So the profitability was the big story of the quarter. Let me scroll down to this page right here. And this is Lemonade's big, this is, in my opinion, the biggest takeaway from this entire earnings report. So Lemonade surprised investors a few quarters ago by issuing kind of their, some profitability guidance for the first time ever, saying when they're going to break even on cash flow, when they're going to start earning positive net income, things like that. So the previous guidance said that they would be cash flow neutral by mid 2025. So people were happy to see that at the time. The big news this time, and you can see it right here, the unit economics of their business are improving. So now they have accelerated their cash flow break even date to the end of this year. So they say they will be cash flow break even by the end of 2024. And then in the first quarter of 2025, Lemonade expects to be generating positive net cash flow on a consistent basis. That is huge for this company. That means that $927 million of cash, it's going to decline for a couple of quarters, but most of that's going to remain and going to be on their balance sheet. If they can achieve positive net cash flow, they can stop using all this money they have in the bank and just be a self-sustaining insurance business, which they are not right now. So that's big news. And again, that's a future promise. This was from the first quarter of 2024, and they're talking about something that's going to happen in the first quarter of 2025. There's no guarantee it's actually going to happen, so take it with a grain of salt. This is coming from an optimistic management team, but this is very, very nice to hear for investors. Stopping my share real quick. A couple other key metrics to pay attention to. For one, Lemonade's retention rate, the amount of in-force premium that it's kind of rolling over from year to year from existing customers, is 88%, 88%, which is a very strong indicator that its customers are satisfied. That's a pretty high retention rate in the insurance business, especially in kind of types of insurance that people don't keep for that long, usually like renter's insurance. Operating expenses were up just 2%, despite a more than 20% growth in revenue and in-force premium. So that was very solid. And the company is becoming more efficient. Management credits their AI efforts on this. For example, they mentioned that their total headcount is down 11% in the past year, but the total book of business, its in-force premium, was up 22%. So it's handling a lot more insurance with fewer employees, which is a great thing for efficiency. The company's guidance was very, very strong for the full year. But again, that profitability is the biggest story of the quarter by far. If they can achieve that, it would be a big deal. The stock looks very cheap right now. I mentioned they have $927 million in cash on their balance sheet. Roughly all but about 200 million of that is cash that they could actually use. They're holding 186 million as regulatory surplus. So figure about $740 million of actual cash on the balance sheet for our purposes. This is a company with a market cap of about $1.2 billion. So the market's not valuing this business very highly. If they can continue to grow, achieve profitability, keep most of that cash on the balance sheet, this could be a big winner over the long term. I don't think Lemonade is a sure thing by any means. I'd say this is among like the 2 or 3 most speculative stocks that I own in my portfolio, but it's one that I think the risk reward is definitely starting to swing in investors' favors because they keep reporting positive, exceedingly better profitability metrics and a clear path to profitability, and the market's really not giving them credit for it yet. So keep an eye out over the next few quarters. I mentioned there's a lot of seasonality. The second and third quarter numbers might not look as great, but as long as they say that that path to cash flow positive is still on track, this could be a really interesting one to watch. I'd love to know what you think about Lemonade. Leave me some comments. I'll do my best to respond to all of them individually. I want to thank The Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. You all know how much I love researching new stocks and trying to find the next best investment, so I'm proud to partner with The Motley Fool to bring you 10 stock picks from their popular product, Stock Advisor. Stock Advisor has beaten the market by more than 4 times, so go to fool.com/Frankel to get your 10 stock picks now. The Motley Fool Stock Advisor returns are 650% as of April 16th, 2024, and are measured against the S&P 500 returns of 148% as of April 16th, 2024.